What is up, everyone? It is January 31st, 2025. This is my NASDAQ trading recap for the week. We had quite an eventful week. As you can see, Sunday, we just absolutely ran down 1,000 points for some DeepSeek AI news. And honestly, it just looks like market manipulation. We were close to breaking all-time highs like around here again, and right before we just nuked. But anyways, coming into this, I'm gonna do this recap a little differently than I've done before, and this recap is gonna be different as well in the sense that I added some things to my strategy that I didn't previously cover for NASDAQ because my old strategy was really more of a bigger wins but lower win rate type of strategy, which is really good for crypto. I use something similar for crypto, and it works really well for swing trading. However, when I'm trying to get consistent payouts with prop firms, it just becomes a lot harder to do that consistently when I'm going for, like 100, 200 point moves. And instead, I decided to just increase my win rate and reduce my RR. So instead of going, for 5 RR or something like I did before with a lower win rate, now I'll have like a 60, 70% win rate with a 1 or 2 RR instead. So like more of a scalping strategy. And go for 50 to 100 points every day across multiple accounts and get payouts that way, get denied less, etc., etc. So it just works a lot better, at least for me. So if something isn't working, change it, like don't be afraid to try out new strategies and stuff. At the end of the day, no matter what strategy you're using, a lot of the same things are going to apply. Obviously, if you can just look at the market structure, if you have market structure down, liquidity, context, if you can get all these things down, like the basics, the fundamentals of why the market moves, and you get an idea and narrative of where it's going next, then you can use like pretty much every strategy, because every strategy is just that. Like they just use that as the core. And then all these little tools around it are just for entry models, right? So yeah, I basically just changed up my entry model a little bit, but I think you guys will like it or learn something from it at least. So going into Monday, obviously we got this huge sell-off, and it dropped 1,000 points. We put in the low on Monday, and I just didn't want to trade this because of that huge move. And honestly, I just thought the session was just going to chop the whole time because of that huge move. Normally when we have a huge move like that the night before, we just don't do much the next day, which kind of what happened. There was one trade around here, a short that I saw, but I just didn't decide to take it. It just didn't seem like it was a high probability day, so decided to skip. But Tuesday, let's go here, turn off this indicator. Tuesday, we came up, we swept these highs up here, and we had a fair value gap. I think it was here. And so I was looking for a short, but then I saw that we had taken out a fair value gap. I think it was here, if I remember correctly. Yeah, so we had a 5 minute, I think we had a 15 minute. No, I think it was just a 5 minute, but anyways. My bias here was that we were going to take out this high, especially after we put in this SMT with ES. What happened was we put in this SMT, we got this inversion on the 1 minute candle, on the 1 minute chart, and then we had the CISD here. So this change in stated delivery. We had these relatively equal highs where I put my break even. So we came up. I didn't take profit, unfortunately, which I should have, because that was like a 40-point move from entry. But we got front run on this liquidity sweep. So it came up, and I got stopped just break even within like 2 candles. So yeah, that was that trade. And as you can see, it just front ran that level again. But Yeah, I think that's all I took. Yeah, that was all I took for Tuesday. So let me move on to the 5 minute and just, or 15, and just move on all the way to this Wednesday. So um, I decided to do replays just because it's just so much easier if I'm like switching time frames all the time. So let's just get this filled in. So here we had a 4-hour fair value gap. If I hop up to the 4-hour, we had this huge gap from the nuke. We had this huge 4-hour gap. So I was looking for a rejection, any sign of rejection on the low time frame, which kind of happened. And then we had this bullish fair value gap under us as well on the 4-hour. So we were kind of in between Peter rays, but for me, we had all this chop. I remember just sitting in this, and then we swept this low 3 times, right? 1, 2, 3. Usually about after the 3rd time, you want to see for signs of a reversal, which here I did. I got a 1-minute inversion that I saw. Well, sorry, actually, let's go over this first trade. I know why I'm moving on to the second one. Here, once we swept this low into, it was a 15-minute fair value gap. 15-minute fair value gap pulled from over here. It's this tiny little gap there. We got a 1-minute inversion and a CISD here, which happened after my entry, but it was more confirmation for me. But I entered here at the market once with this 1 minute closed as an inversion, and I put my break even here. So I got this break even trade to just completely nuke through right after. But once we got the 3rd sweep and I saw all these low resistance highs here, I was just bullish to see these get swept if we were to go lower. So I was looking for a reversal once again, which we did get. Kind of the same setup, except this time we just swept this liquidity again, right? What is going on? Okay, I don't know what that was about. We swept this liquidity again, and once we had this inversion, I entered again, targeted these highs. My break even was this intermediate term low, or sorry, high, intermediate term high. Swept out these highs, and as you can see, we just completely nuked again. So yeah, pretty good trade. I got 66-ish points from that, so that's pretty good because I did take TP1 here. So in reality, it was about 40 to 50 points, which is still pretty good. So moving on, let's fast forward to the next day. There's a lot of movement this week, which I really liked. So yeah, especially after that huge dump, we just had so many levels of interest. But okay, so the next day, yeah, I had quite a few trades. This was, I believe, yesterday, right? So yeah, Thursday. So we came up into this 4-hour gap. That's what this gray zone is. And coming into the morning, we had this 5-minute fair value gap that wasn't taken. We had London highs above, as you can see. And we had already taken Asia lows. So what's the next draw on liquidity? Higher, obviously, right? So we had this 5-minute fair value gap and then London highs. So that was my draw. So I was bullish coming into the morning, and I was looking for longs, obviously. So once we swept these 2 lows here, and we got a clear, fast displacement up, we got a 2-minute inversion here. And as soon as that happened, I market ordered in, and I was targeting the weekly open. That's what this line is. But I actually took profit at this 5 minute, and then I actually fully closed out here once I saw that this candle closed with a lot less momentum. Notice the bodies of these candles that they're just really huge just because it was such a fast displacement move higher. And then this one kind of slowed down with momentum. And I don't know what it was. I guess it's just intuition sometimes, but I decided to close because we had already had a over 100-point move at that point. So I was like, I'm not going to get greedy. Base hits. I don't care if it comes up to this weekly open. So I just closed out here. And I actually have the screenshot from yesterday. Actually, it was. So yeah, I just fully closed out here right before the weekly open. And I got lucky because what happened next was we just completely nuked back through, and I would have got stopped to break even here. So that was pretty lucky, but banger, honestly, trade. 100 points right there. Moving on, though, here we moved lower, so we kind of front ran the weekly open. And at this point, I had a lot of levels that I was eyeing down lower. We had all this liquidity here from these wicks, and we had a new week opening gap from that Tuesday. New York Open just completely gapped up, and we never filled it. So that was a key level that I was watching. But we ended up just bouncing at this equilibrium point out of this entire range, right to the tick, honestly. And so this trade here, I was trying to long because we had this area up here, this gap in 1 hour, and I didn't think that we were going to get these lows before that. So I'll go into that trade later on. But on this one, we had an inversion, a 5-minute inversion on the higher time frame. I won't switch time frames because replay just resets me in a completely different area, as you've seen. So we had this 5-minute inversion, and as you guys know, if you guys trade inversions, the higher time frame the inversion, the higher confluence it is, right? So the higher probability. So I was looking to take out this high and tap this CISD, and I believe we had a 5-minute fair value gap somewhere here as well. So yeah, I was just looking to see price tap into that fair value gap. It was somewhere here. It might have even been this line. Don't remember exactly, but I don't want to change time frames. But we just actually just chopped, and I just stopped out break even here, believe it or not, because I saw that, okay, we kind of got some movement higher, but it wasn't that great. And there was a 1-minute CISD here. I'll just switch. There was a 1-minute CISD there, and it just didn't get respected. And it came down, tapped the daily open again. And it was just kind of chopping. It failed to make a higher high. And at that point, I was like, you know what? I don't want to give these profits back to the market. So I closed out at break even, which I can show in this screenshot here. So I entered, and then I kind of stopped at break even there. So pretty good on my part because we ended up just nuking through, as you can see. And then again, we got a 15-minute inversion, and I'm actually going to recap this trade that I didn't take, but I saw in hindsight that was so free. We had this 15-minute inversion and the same highs that I was targeting before, right? But once we got this 15-minute inversion, which is extremely high probability, by the way, this was an obvious long because we had a close above here on the CISD. We had a, close above that formed a CISD. So you could have entered anywhere here. So something like this. Stop below this low and targeted like up here. right? And it would have been free 75 points pretty much. But I didn't end up taking this. I was busy doing something else. I don't remember. But yeah, you want to see trades like that where it's a kind of like a market maker buy model where you're just going to sweep down, take out a bunch of liquidity, and then you build up all of these low resistance highs here, and then market just comes up and just takes all of that out, and then either chops or just continues in the direction that it was already going to. So at this point, I'm still thinking about these levels down here, and I was looking for a short, and this is what I had because I saw a 5-minute inversion here on the 5-minute time frame. We had an inversion close below, and then this 5-minute fair value gap formed as well. So I put my stop above that, and then I was targeting this 15-minute fair value gap down here that we had. I won't go and change all these time frames, but originally I was targeting this down here, which was the fair value gap, which was a huge trade, obviously. But in reality, I would have been happy with just this liquidity. And this 15-minute gap was a 1-to-1 already. So it was super worth taking. I mean, so I got the 1-to-1 and then just got stopped break even. So not too bad. I always put my break even at the intermediate term high as long as it's far enough away. Obviously, you don't want to just take a trade that you're going to immediately move to break even and then just get stopped and it just runs to your target. You want it to be, far enough, but close enough to where it makes sense as well. So that's something you'll pick up with experience if you haven't already. So let's move on to the next day because that's all the trades I took. Honestly, pretty good day, as crazy as it may look here. Moving forward, it's Friday. Friday actually had some decent price action. Not in the morning, but I also caught probably one of my favorite trades, if not the favorite trade of the week, to be honest, right to close it off. So let's go over this. So let's go on the 1 minute. Yeah, okay. So 9:30 market open. We had manipulation down before continuing much higher. I believe we had taken out like London, some level. Let's see. Kill zones. Yeah, so we had already taken that pre-market. So the market just goes straight to the point of interest that I had for the past like 2 days that I mentioned even earlier, which was the bearish fair value gap on the 1 hour inside the 4 hour bearish fair value gap. So when they overlap like that, you want to be watching on the lower time frame to find a low time frame confirmation that we're rejecting here, which is exactly what I found. So I'll show you guys what I'm talking about. All of this was just kind of chop and grind up. There was really nothing here that I liked. As you can see, it was super wicky as well, and it was just not great, not high probability conditions. But up here, we got what's called a open high, low close. So as you can see, it's 11 a.m. when this candle, this area closed. So this 1 hour candle, I'll just pull it up because it's a great example of open high, low close. Why does it pull me all the way over here? So as you can see, the previous 1 hour, the 10 a.m. candle closed here. So I pull over this wick high to the right because on the 4 hour, it's building this huge wick, right? And rejecting from the 1 hour. So you pull over this 1 hour wick high, and that is an open high and low close candle that's forming there. And that's exactly what you want to be looking for in these high time frame areas. So that's exactly what we saw. This is the wick that I was talking about. And we had an SMT where ES took this high, but NQ didn't. So that shows me that NQ was weaker. And therefore, I was like, okay, we had this displacement a lot lower. And you can call this even a CISD here on this 1 minute where we got that. And we had not only this liquidity, we had this 15 minute, we had this liquidity, these liquidities points down here, and we had another 15 minute all the way down here, plus whatever else. So all of my biases were pointing at moving lower because the draw liquidity is lower. We had this 15 minute and this 15 minute to fill. So I was looking for a short. And as soon as we got that SMT and we got this CISD, I was like, okay, I'm going to take a shot here. It's a very cheap trade because we're only risking it was like a 12-point stop. I mean, that's so free. So 12-point stop. My entry was at this H1 wick that I pointed out earlier. So I entered here, and first area was here to break even at their intermediate term low. And then my first TP was this liquidity down here. And we ended up moving all the way down to this unfilled 15-minute fair value gap. So very, very, very nice trade. We got almost 90 points from it. So yeah, I mean, if you zoom out, this would have been an insane trade if you left a runner. But obviously, this is just being greedy at this point because you got 420 points from it. That's kind of crazy. You didn't even take out this low or anything. But yeah, I mean, like I said, base hits. Otherwise, those prop firms are not going to want to be paying you out for whatever reason with their rules and stuff. So that is the final trade of the week. Absolute banger. Also, if you're wondering about these projections, you want to pull it from the high to the intermediate term level, whatever it is. You can use this for longs as well. And you want to target the -1 or a level in the -2 to -2.5. For me, this was the 15-minute fair value gap here. So it just added extra confluence that was a great place to take profit, as well as anything between the -4 and 4.5. You want to look for profit levels, which again lined up perfectly with the 15-minute fair value gap. You could not have had a more perfect trade, to be honest. So that wraps that up. As you can see, this is a great trade, and I hope the new strategy that I'm showing in this video and this recap is digestible. There's a lot more other little nuances and things you have to understand, but that's the gist of it. I hope this was enjoyable. Leave a like, subscribe. I'm going to be making these every week. Hopefully I get better at explaining all of this, and hopefully help some of you guys be better traders. But yeah, if you have any questions or anything, feel free to hit me up on Twitter. Some of you guys have my Discord, etc. I'm always here to help. But if not, I'll see you guys on the next one. Thanks for watching. Goodbye.